The Economist magazine recently posed an interesting question. Where in the world do you find rising incomes, low public debt, an affordable social safety net, and a stable political system? Their answer is Australia, and they argue that Australia is the rich world's most successful economy. It's 27 years since we experienced a recession, and over that period, the Australian economy has grown cumulatively 3 times as much as the German economy. The median income has grown 4 times faster than the US. And at 41% of GDP, Australia's public debt is less than half that of the UK. So that must mean the Australian share market's been the best performer over the last 27 years, right? Well, that's not the case, as many of you know. And it's 11 years since Australian investors have enjoyed the best return of all asset classes coming from their Australian share portfolio. It really highlights the disconnect between economic fundamentals and short-term market performance. And clearly now is a good reflection period given the significant volatility over recent weeks. We'd argue that the recent sell-off has much more to do with investor psychology than it does with economic fundamentals. Many of the concerns that are being expressed by investors, such as trade wars and political instability in the US and in Europe, and valuation to a certain extent, they've been in the minds of investors for many months, years in some cases. So why is it now that we've tipped over into correction territory? We believe that rather than trying to predict the unpredictable, we're much better served on your behalf to focus our energies on making sure that you have an effective way to meet your long-term goals. Great diversification and ample liquidity to ensure that you can face the ups and downs of the market with complete equanimity. We certainly will continue to keep you informed, but importantly, we'll keep you on track. We look forward to talking to you soon.